Hey traders, I'm Noah. I have just turned a $1,000 deposit into over $30,000 profit with withdrawals of $3,000. My balance is still at $27,000. Want to know how? It's all about mastering strategies, managing risks, and making smart trades. And I can teach you how to do the same.
Hello everyone. So in today's session, we're going to discuss about how to draw support and resistance like a pro. I'm Noah and I am a professional trader, and I'm going to teach you how to become an advanced trader in drawing these institutional key levels from where you can expect a rejection or continuation of trend. Ideal support. So what is ideal support? This is a type 1 example of support and resistance when two equal lows are at the same price. This is the first low. Price gives us this low and then goes up from it. The price comes back to this level again, and then again rejecting it by giving us this high. So for the third time when the price comes back to this level again, and this low is expected to be a third equal low by the support and resistance traders, because the first time when the price rejected, it gives us a good momentum. Second time when the price rejected the previous equal low, it also gives us a nice high again. So third time when the price is again coming back to that level where it has already given you two equal lows, traders again expect the price to give them a bullish momentum from it again. The thing here is most traders are basically use support and resistance in an advanced way and also face a problem of using a stop loss, because some traders, when they take a trade, they take a trade with a very tight stop loss like that. And when the price gives them a rejected candle, like if the price is giving them a long wick candle, by rejecting this support, it resulted in a losing trade for them, because when the price is giving them this type of candle which has a decent lower wick, that resulted in losing trade for them, and they lose the trade even though after that the price goes in their direction. And there is also a problem with some traders, those who use a wide stop loss. Because if a stop loss is very big, and if you're choosing to set your target profit at the high, in that case, you are very less likely to make more money. Why is that? Because the stop loss is very big. So is the price on your successful trades, when the price is hitting your take profit, you are making the money. That's right. But when the price is hitting your stop loss, you're also losing the money there as well. So after taking number of trades, you will be very less profitable than those traders who are using a good stop loss. And I will discuss in our this video how to use a decent stop loss that I also discovered by taking hundreds of trades in support and resistance. We have a low here, price goes up from it. But the second low, if you see, this is a lower low. Price goes below it before giving us another high. Third time, price again give us a low, which can be treated as an equal low according to the previous low, and then the price goes again up from it. So the definition of a classic support is when two equal lows are basically at the same price, but between these equal lows, the price has also given us a lower low. So when the price comes back to test that equal lows again, you can expect the third low to be a third equal low and can expect to take a buy trade in that range. Okay? Because most of the times this lower low was only the price created to just manipulate the traders in the wrong direction. And after that, they introduced liquidity in the market and then went against it. So that is the reason we can use this as a classic support where the price is given you first equal low, first low, second is a lower low. Third time price again created a equal low according to the previous one. Third time when the price is here, you can look for the buy trade. Again, the problem you can face is within the stop loss. You should not use a very tight stop loss around these zones, okay? Because some traders of support and resistance, they are only taking the trades based on one-to-one. Means in the support, you can expect the price to hit the target profit up to the previous highs, right? Because you expect the price to change the trend after the range, after the support. But most traders are just taking the profit of one-to-one and they close their trade at that range. Okay. Instead, they should expect more target profit like 1 to 4 or 1 to 5, because that will give you more edge than the 1 to 1. Now we discuss that how we can basically take more profit and how we can also manage your trade as well in our next videos that we're going to discuss in our YouTube channel.
We will be releasing ton of new content every week. So make sure to hit the subscribe button and turn on the notification bell so you know exactly when the new content is released.
This is a dynamic sport where 2 or 3 equal lows are at the same price. But between these equal lows, price also has given us the lower lows and higher lows. You expect the third low to be a third equal low and can expect the price to go up from it. Okay, we have a low. This is a lower low. Price made a high. Price again created a low according to the previous low. So it is an equal lows for us. Then the price has created a higher high, a higher low, just a lower high, again drop, give us a third equal low. So we have 1, 2, 3 equal lows at the same price, and between them we have a lower low, we have a higher low. 4 times when the price come back to here again, you should look for a buy trade at that range. But putting your stop loss below the support. But the term is you should not use a tight stop loss. You should not use a stop loss that is very big. Because if you have a very big stop loss, you are only making 1 to 1 if the price break the specific highs. Okay. If you're using a tight stop loss, there's a chance that if the price give you long wick candles, the price can hit your stop loss before going in your direction again.
If you want to be a part of us, go to the description of this video and join our free Telegram channel for education and signals. Here we share free trading signals alongside with multiple educational content and also our success stories that we have accomplished in our trading world. By joining our community, you will gain access to valuable insights and real-time updates that can help enhance your trading strategies and improve your success rates.
This is Bitcoin versus US dollar on 1 hour time frame. We have a potential 1 equal low here. It's a first low the price is created before creating a high. The price is also creating another high here, another low here as well. And third time when the price come back this level, we can expect for a buy trade according to the idle sport. So basically this low is there and that is testing this low at that level. So I'm gonna draw it for a third time here and look for a buy trade. Now the thing is, this is good for me because I'm expecting the price to go up from it. So that is where I'm gonna look for a buy trade right there. That is a sport for me. But the thing is, where I'm gonna put my stop loss, like should I put my stop loss way too low or below this candle? Where should I put my stop loss? And for that question, we do not have any answers for it, because if I could put a very tight stop loss, there's a chance of hitting my stop loss. Or if I put a stop loss very wide away from the price, there's a chance of the price maybe will not give me a good reward in that case. So the methodology that I use basically to put a good stop loss is I draw from the lowest point that the price is created within that range from here, and the highest point that the price is created within that range, which is this one. So I draw the 1.2% level where I am not expecting the price to drop from it, because this is our sport, right? Where two lows are being connected as equal lows. And my stop loss should be right there. It should not be very too far away, or it should not very tight. That's how we're going to use. I'm going to give it a name, support and resistance stop loss. And here we go. This is our stop loss. And we're going to take a trade like that, because that is where the price is tested. So our entry is going to be right on our support, and our stop loss is going to be right below the support. This is going to be our entry, and our target is going to be right on the half. So let's see this, how the price basically reacted to it. Price tested our entry, price has tested the equal lows again. We took a trade right on our high. Our stop loss is right there at 1.2% level. The price is going up and creating a potential high. It is very near to our take profit. In that situation, as the price has created a new low, so now I'm gonna move my stop loss to that low now. I'm not gonna use trailing stop loss. Instead, I'm gonna use my stop loss to that low. And as the price hit our take profit, and that was a profitable trade for us. We have a the price has created a low here, price goes up from it. It has again created a low right there before the price goes up again. For a third time, when the price comes back again to create a potential low, we will take a buy trade right at that price. And our stop loss will be where? Right at the 1.2% level. If you see, this is the Fibonacci retracement, and that is the setting of Fibonacci retracement. I have checked only 0.1% and 1.2%. These are my only lines, okay, on Fibonacci retracement. I draw it from the low in case of support and resistance towards the high. Stop loss will be right on the 1.2%. And our target is going to be right on the high, okay? Because I do not use the methodology of taking trades on 1-to-1 or 1-to-2. I don't use this system. I only target the highs, because if there is a equal highs, equal lows there's a high chances that price is gonna take first this high. So that is gonna be our first target profit. And there's a high chances that the price is also gonna take this potential high as well. So this is how we're gonna take a trade. Stop loss is right on 1.2% level. And we are expecting this third low to also be a equal low. Price tested this level and then goes straight up. And that was a quite great profitable trade for us, okay? Because our stop loss was right there, not too far away, not very near to our equal lows, just at a good percentage level based on the highs and lows. And we took a trade, and now the price hit our target profit as well. In this example, what we have, this is also an example of ideal spot. We have a one low, price has given us a second low. Now they are treated as equal lows. Now third time when the price come back here again, I'm also expecting it to be an equal low, expecting the price to go up from it. So from the lowest point towards the highest point, I have drawn my Fibonacci retracement. The good stop loss is gonna be at 1.2%. And I'm gonna take a buy trade right on my spot, which is right here. And I'm gonna put my stop loss right on the level which I have drawn as 0.2%. And my target is gonna be right on the high, okay? First target is gonna be this high, second target is gonna be this high. My target is not based on percentage, my target is based on the price, highs and lows. It's not based on percentage. So price is rejecting the support, and now it's going up from it, and that was a great momentum. It showed a great sign of strength for the buyers. Oh, again, it may be due to the news effect. Yeah, but we will not be worried on these events because we have already taken some target of this high. We have already taken some portions of this high. Now we're targeting this high. You can see even though price is giving us a news event there, but it is never going below this range, okay? It is testing the support, that's right. For those traders who were using a tight stop loss, the stop loss would have been hit when the price gives you this weak candle. But we are safe because our stop loss is basically based on a percentage between the highs and lows. It's not based on just our guess.
Don't forget to hit the like button, hit the subscribe button and turn on the notification bell to not miss any new update.